What up, Hyperchange? Welcome to another episode. Today we're talking about Adobe and whether the company's stock can continue its meteoric rise. This is actually the second video I made on Adobe. Put out a Moonshot Monday a while ago about why I believe Microsoft should buy the company. There's a ton of synergies with what they're doing in the enterprise. Both companies have a couple partnerships already. Also, a fun fact, the CEO of Microsoft and the CEO of Adobe went to high school together in India, so that could be an interesting way for them to team up. But anyway, this episode I wanted to just talk about Adobe because they're an interesting company that's transitioned to a recurring business model. They're riding this trend of creators on the internet and empowering individuals to create all sorts of digital content and media, which I think is obviously where the future's headed. Maybe a little biased as a content creator myself. From a stock price perspective, I mean, Adobe stock, I pulled this one up so you can see all the way back to like pre-internet crash. Adobe stock was sort of flat for about 10 years, never really broke above that 50 per share mark, but then in the past 5 years has skyrocketed from $50 per share to $250 per share, soared to new heights. The company's worth over $100 billion today. And so you may be asking, like, what happened here? What's Adobe been doing recently? It's all about what's going on under the hood with the company's financials. So this is a look at annual revenue. The trend is definitely up and to the right, but there's some things going on under the hood. But actually, first, before we get further, I did want to point out that my last video on Adobe, I had them doing $8.7 billion in revenue in 2018. Now I have that up to $9 billion. And these are fiscal years for Adobe are a little bit different. Their fiscal year actually ends in the end of November. So even so, though this says 2018, it's not 2018 ending in December. It's ending November 2018. But anyway, Adobe in 2009, the Great Recession, obviously that is what catalyzed the revenue decline there. And then the company started this very interesting transformation, which a lot of companies have done in the digital space, going from selling software licenses on a one-time basis, like you just buy your software and get it once, and then you have that version, towards a recurring subscription SaaS, software as a service based model. And this revenue is recurring. This transition often can take, years and years to get right. Many companies have failed doing transitions to recurring business models. Usually there's a ton of bumps in the road. It goes like the company's never really as profitable as it was without the recurring business model. So but Adobe, part of the reason why I want to make this episode is actually been tremendously successful in switching its business to SaaS. So for 4 years, from 2010 to 2014, or 5 years, revenue was essentially flat. The company was going through this business model transformation, lots of different pricing changes. But then after that, as you can see, once they nailed out the recurring business model, revenue started skyrocketing every single year and has been on this trend of accelerating growth. And now they're on track to hit $9 billion in revenue in 2018. That's representing top line growth of about 23%. And following in Adobe's footsteps in revenue, earnings and operating income has also grown rapidly along with this transition to SaaS. So after earnings were actually sort of flat and just pretty lumpy before 2012, and then as dipped a little as they invested. But now that they've really nailed down this SaaS transition model, Adobe's on track to hit $3 billion in operating income this year. And so if they're going to do $9 billion in revenue, $3 billion in earnings, that's a 33% operating margin. This is an incredibly profitable company today. They've essentially undergone the full transition to a SaaS model. And so this is why the company's stock is skyrocketing. I think what's going on under the hood, earnings and revenue are skyrocketing. This is driving the underlying changes in the stock price. So now, let's talk about Adobe's valuation, because the stock has absolutely skyrocketed from that $50 mark to $245 a share. If we assume there's about 500 million shares outstanding at $245 a share, we're looking at $123 billion market cap for Adobe. And remember, this is a company that in fiscal 18 is only on track to do about $9 billion in revenue. That's a 13.7 price sales ratio. So pretty expensive from a price sales basis. But once again, these recurring software as a service businesses command very high price sales multiples. And that's what Adobe has. And for good reason. I mean, it's a very sticky service. If you think about when you have Adobe and you're paying that monthly fee to access Adobe's cloud, and you're a creator who's making movies and YouTube videos every week, or you're a YouTuber, you're not going to stop paying Adobe. Like, moving on to the earnings of the company, Adobe is on track to generate $3 billion in earnings this year. 123 divided by 3 billion, we're looking at a 41 times price EBIT ratio. So 41 times price earnings is a pretty expensive number. But once again, Adobe's a growth company. They're sticky. This is high quality earnings. So I would argue that right here around $245 a share, Adobe is very, very very fairly priced, a little bit of growth, trading at a premium valuation, but it's a premium business. They're putting up the numbers. And so it's all about where you think this company is headed. Can they continue this trajectory of accelerating growth and really, double down on the subscription business model? And I think the answer is yes. They seem like such this old school software company that's like legacy software, and that's true in some ways, but they've really pivoted into this new software as a subscription model, and their customer couldn't be more a part of the new economy. And what I'm talking about here is this rising trend of creators, people who are using the internet to distribute their content, either their pictures or their videos or their animations or their whatever, and design and distributing that on the internet, building a brand, building a business. I mean, this is the future of the new economy, is creators, and it's only getting easier and easier to do more and more complex things with the computer, and Adobe's software is literally empowering creators to build their businesses and build their content. Creators continuing to gain leverage, more and more people becoming creators, the more and more ways in which creators will create new types and styles of content. I mean, Adobe is at the heart of this thesis. And that's why I think this is such an interesting company, because it's old school brand, old school technology in many ways. Maybe it was, Adobe was almost way ahead of its time back in the day. And now we're sort of in this creator heyday. And I think there's just so many avenues in which Adobe is going to continue to expand and double down here, that I think this is a growth company. And I think if you believe in creators and you believe in the power of the product, there's still a ton of upside for Adobe stock. Anyway, let me know what you think in the comments. This episode was a little different. Wanted to take a look at a totally different software kind of style company, recurring business model. Would love to know what you think in the comments below. Fairly priced, underpriced? Do you use Adobe's products? What do you think as a customer? Anyway, this is Hyperchange. Huge shout out to our Patreon producers and supporters. Anyway, I'll see you guys next time. Peace.